Grant Mitterlehner on this, the Mitt blockchain CEO, was into this before anyone was. But Grant, now we're told that 60% of crypto buyers are underwater. I don't know how reliable that statistic is, but it likely will feed the beast, won't it? Will likely feed still more selling.
Yeah, so one of my favorite sayings is when times are good, you forget they're ever going to be bad again. And when times are bad, you forget they're ever going to be good again. And think about this. The fear and greed index right now for crypto is at 10, extreme fear. And what's so interesting is when this was on the upturn and it just cleared 30,000 for the first time, about a year ago, there was extreme greed and everyone was trying to buy in. And I say this time and time again, if you're trying to trade Bitcoin for the short term and you're trying to make quick money, you might as well sell everything you own and put your money in something else. But if you're betting on this for the next 10 years, 20 years, and so on, you will win. And every time it drops like this, you get on your knees and thank God that you have another opportunity to buy this at a 50% discounted purchase. And kind of along what they were saying about Coinbase, it's important also for investors that never to leave your money on exchanges. You can't put your risk of your currency on an exchange. If something were to happen and you have your money in an exchange, you could be threatened. So when you purchase it on Coinbase or something else, Robinhood, you need to move that money or that currency into either a warm or cold wallet where you're protected. So even if something were to happen to Coinbase, which probably won't ever happen, but if it were, you would still be protected.
How do you do that, though? If Coinbase is your market, it would be akin to something you have on the exchange, a stock exchange. Of course, getting a stock certificate or the actual certificate is one thing. How do you do that with this technology?
Yeah, so it's pretty interesting. So you can send Bitcoin or any cryptocurrency to anywhere in the world in a couple of minutes instantly. So if you purchase it on the exchange itself, you simply just send it to a different wallet address. And Neil, it'd be no different than, in a way, except for I would own it. If I had $1,000 at my Chase Bank, let's say, and I sent it to your bank account, the only difference is I would own that wallet and I could store it. No one could get into it. No matter what happens in the crypto market, no matter what happens with any government or any single entity, you're protected from being hacked and from anything being taken or stolen from you in many different ways. So it's important not to leave your money on these exchanges because you don't want to be at the mercy of them. Because we have seen small exchanges, bad things have happened and investors have been hurt.
People don't think that way. That whether Coinbase survives this is anyone's guess. I think you're of the opinion that you think it will survive it. It's been battered. But it would be akin to if, like I said, the New York Stock Exchange, the NASDAQ were to close because of, in the NASDAQ's case, steep technology losses and cascades. Very little likelihood of that, I grant you. But could people be stuck holding the bag then on these investments and not realize it?
Well, here's the thing: is that if you understand where Bitcoin's going, all of this stuff doesn't matter. There's any
well, it would matter if you didn't know that you had that option, as you just outlined with Coinbase. That was the means by which, I'm not saying a majority, I don't even know, but a good many investors have gotten into this stuff, and they assume the market from which they bought it is safe. If it's not, and it goes under, then their investments go under. And now we, look at Janet Yellen looking at the fact policing a lot of this more. I'm just wondering where you see this going.
Yeah, I mean, that's why I believe that some form of regulation is fine. Bitcoin, you need to stay out of the way, but when it comes to stable coins, when it comes to crypto exchanges, I think some oversight is good because new investors.
But in the case of stablecoin, don't you think that's akin to, closing the barn doors after the animals have left? Potentially.
Yeah, I mean, possibly, but I mean, that's where it's like, if you have a stable coin, I believe that the government should have insight on where that they're holding their reserves and where they're holding their capital to protect it so it's stable and consistent. But if you have investors, retail investors come there, never invested crypto before, they have no idea that they should move it off in an exchange or that they should do certain things. They're at a threat. And some form of good regulation is fine because every major investment is regulated. The stock market, real estate, every other thing. And some, not over-regulation, but enough to protect investors from something crazy happening with Coinbase or something happening with a wallet or a stable coin. They need to be protected. And I think some form of that is important. and it's something they need to look on. But this is why investors need to be educated and not just shooting from the hip when it comes to crypto, because it's unbelievable and it's a huge buying opportunity, but they need to understand what they're doing and how to do it in the right way.
Got it. Very good catching up with you, Grant. Thank you. We'll see what happens. All the crypto-related investments